Right? But yeah, this is just looking at the major energy product. But yeah, this is just looking at the major energy products. Is the chart up on the? Can you guys see my
I believe
chart?
so.
Beautiful. So yeah, basically, as Sam was alluding to, just looking at the major energy products in the futures market, all front month, and heating oil is the only one that's squarely above the prior cycle high anchored VWAPs, right? And we have crude oil, both the American and also the European, the Brent, and also gasoline, RBOB. That's what, like diesel, Sam, all
No, heating
climbing.
oil is the diesel.
Heating oil is
Gasoline is
diesel, excuse me. Yeah.
like gasoline you get at the pump.
Oh, so yeah, basically that's just a logical place for these to find some resistance. I mean, these anchored VWAPs have capped every major advance for the last 4 years. So just kind of watching those levels today provided a fantastic, just phenomenal, delicious opportunity to sell into some strength, both energy stocks and also maybe USO calls. I mean, it's been beautiful, and I think this trade is probably it's. I mean, this is not the best day to get in, I would
Totally,
say.
yeah. Like I'm still very, very bullish on energy over longer time frames, but over the short term, yeah, it seems like it's a bit extended and
A
would
little bit
make sense.
extended, a
Yeah.
little bit extended, and that's what markets tend to do. They draw people in once a trend is played out, and then they punish the latecomers. I mean, we've seen this story play over and over again. Even, I mean, it's a story as old as time, really. But I don't think this move is over, done with
A
quite
hundred
yet.
percent. How about the be wet? We were talking about the be
We
wet
were
before
talking
we went
about the
on here.
red. Yes, we
Man,
were.
what a move. Up another 25% today. I think this is up 500% or so over the past year.
Yeah, I mean, that's just an absolutely. I'm going to do a year to date. 300% year to date. I mean,
Not bad. Makes South Korea look like a chump.
it does, man. It does. And you know, I woke up pretty early today, like 5 a.m. And I don't know why Sundays lately I've been having trouble sleeping. It's all the anticipation for Monday. Not because I'm, too heavy in one area or another and I'm losing sleep over my position sizing, just because I don't know. I think the market's kind of bleeding into my sleeping lately. I checked Interactive Brokers and I saw the FRO. These are some of those fugazi overnight quotes, so you can't really give them too much credence. But I saw the FRO was up 10% at one point in the overnight session. Obviously, it did not open anywhere near that. And it's been fading. I mean, all of energy's been fading. The initial move, it's still up across the board, but it's fading. And I've been long this one. I know you've been looking at the shippers as well. I know you have some that you like, but I'm long the TK and the FRO. Both of those are breaking out at very nice bases. See, the TK is even down on the day, which is
Yeah, I looked at my account this morning and one of my energy stocks was down a few percent. I was like, how the hell is that possible? You have crude oil
yeah,
gapping up 10%. I thought that was really interesting, just from a tape reading perspective, not what I would have expected to see.
yeah. Oil services, the OIH, it's actually down. I saw the SLB, the Halliburton, those names were down. The big
How
oil
about the
stocks are still up.
uranium, though? We have some chatter in the YouTube chat, which, by the way, if you are watching the
That's
show
up.
on Twitter, you should come on over to YouTube so you can chat with us and give us a like because we could use your support to keep on bringing
The
more
algorithm
awesome
needs
content
you.
like this. The algorithm needs you, like that old Uncle Sam,
Uncle Sam,
the war
exactly.
propaganda. We need you.
Yeah, dude, look at that. Look at that pattern though in the URNM. That's a great call out. I don't know who put that in the chat, but these are setting up quite nicely. One of my favorite in this space is the Denison, the DNN. I mean, if we zoom
100%.
out, the base becomes evident. I know you highlighted this for commodities not that long ago, maybe 2, 3 weeks ago.
I think it was 2 weeks ago. Yeah.
2 weeks ago. Yeah. So I mean, the base is undeniable, and it's just kind of steadily trending higher. And URNM, the uranium miners, they look pretty tight and ready to go. And if we overlay the REMX, which again, not the same trade, but similar trades.
Oh,
Right?
interesting, Rick. This is not an overlay chart I've seen before.
So blue line is the rare earth. That one's already printing new highs today. I was happy to see that. I snagged some REMX last week. Was praying, oh my God, I hope, this is not just another fake out, but I think this trade has legs in the URNM. But yeah, that's what I'm seeing right now. Also,
Nice.
before we get into the chat, I think this is one of the most important charts in the market. And we're looking at three ratios that seemingly, I wouldn't really say seemingly unrelated, but they've all been the same trade. We're looking at energy mags, XLP, XLY, so staples, discresh, and lastly, value versus growth. And we typically look at these on the inverse. We look at discretionary versus staples. But here I flipped it around just because the value side of the equation has been leading lately. Really all year long, excuse me. And it's all been the same trade. Energy versus big tech, staples versus discretionary, value versus growth. And I think a lot of these charts look extended. Listen, I'm betting they continue higher, right? But you did highlight that the staples had their best 2-month period ever. What was that yesterday? You highlighted that?
Yep,
That
100%. Yeah, very, very extended in the short term, but these look like the beginning of brand new primary uptrends. It's just that they're likely due for a corrective wave.
Yeah, you can just see momentum.
It could go even further, no doubt about it. But do you want to be buying these trades right here, right now? I don't really think so. I think it makes more sense to look for oversold opportunities in places like software that have such wonderful risk versus reward propositions. I think over the short term, that's what makes a lot more sense. But over the course of the next 3 to 6 months, I still think these will continue to trend higher.
That's exactly the right point to make. And I think you can just see momentum waning. I don't have to throw an RSI on top of here. You can just see momentum waning over the shorter time frames. But you mentioned software. This is one we've been watching closely, not just because of all the chatter, but just because of the chart. The sell-offs have been absolutely brutal, 50, 60, upwards of 70% in some of the large names.
These are some of the most important companies, most important stocks, I should say, in the entire market, Rick. You have things like Salesforce, you have Microsoft, Oracle.
It's the second largest weighting in the S&P, right?
It's a very big deal.
Yeah, we have the COVID VWAP in the 61.8 coming in right around 75, 76, right around where the IGV found some support. Now, why do I have the slanted line? Not much of a slanted line guy, but when they present themselves, we have to pay attention. And right now, this is setting up for a nice little fake out, right? A failed breakdown, a bear trap. Setup, right? I have to get above some key levels, but interestingly, it's green today, almost 170 basis points.
Nice. We have John in the chat here, Rick, says that he truly enjoys the work you and I do on the charts. Thanks. With a smiley face. Thank you for the kind words, John.
Thanks, John.
Nice of you to say. And I see all of you in the chat. We've got Dylan. We've got the crypto. We have the Zandman. We've got Mark. All kinds of folks in the chat today already chiming in. If you have not already dropped us a ticker in the YouTube chat, go ahead and do that at this moment, and we will return to it in a few minutes. But for now, we are going to get to the mailbag, and you can get your ticker in next week's mailbag by sending an email to questions@stockmarketmedia.com. We'll be sure to cover your ticker at the beginning of next Monday's episode of Chart Request Live right here on Stock Market TV. But for today's mailbag, Rick, we have a big one here from, let's see, this is from James. James gave us 4 tickers. We have the Ball, BALL, the sponsor of I believe this is on the Denver Nuggets court, the Ball Arena.
Interesting. Yeah,
We
these
also
guys
have
make
the DD. All right, Rick, we're going to pick one of these. We have four to choose from, and
DD.
we have to pick one here. So we have DD, Ball. We also have PPG, and we have Dow. I think going through these charts, my personal favorite was the Ball. So do you want to go with that one? Nice high and
Yeah,
tight bull flag at a key level of
let's
interest.
run the ball, dude.
Cool.
Let's
So
run the ball.
it looks like James got into the Ball at 69.21 with a stop loss at 62, targeting 93 and a half. And the thesis they gave us is Ball is breaking out of a 3-year downtrend. Looking at the volume weighted average price, looks like you already have those dropped, Rick. Well done. Also looking at options, June calls, cheap implied volatility, and no earnings overhang. Wait until 69.21 in the event of a stall or a pullback. This is such wonderful detail. This might be the most detailed chart request I've ever gotten. So really appreciate that from you, James, and keep the requests coming in the future. All right, Rick, break down this Ball chart for us.
Dude, what a setup, Sam. Appreciate that. Appreciate that layup. And yeah, this is a massive base going back to what, 22, summer of 2022. And these guys make the jars, right? Yes. I don't know if you know. I'm sure you know the jars.
Is it like the mason jars?
Yeah, the mason jars, exactly. You can see the logo right there. Right, yeah. It's the same logo on the mason jars. I'm pretty sure these guys are also big military contractors, at least government contractors. Someone might have to fact check me on that.
Interesting.
I think that's the case. And again, the level can be better defined if we tried, right? We got the COVID lows anchored VWAP and the 2020 highs anchored VWAP, along with the 38.2 retracement of the entire decline 2020, 2023, all clustering. We love to see that confluence just because it makes our job easier, right? The market is telling us that this level is important for many reasons, right? 65, 66, right? Maybe even as low as 64 if you want to avoid getting shaken out of a trade. I think that's the level right there. 3 to 6 months could easily be back at 80, right? Especially if industrials keep leading, if the market turns higher, right? I see this base completing in the face of the recent weakness as a good thing, right? And if the market continues to participate, this could easily get back to 80, 3 to 6 month time frame. Right, what do you think?
I just love how it's consolidating sideways here at this key level.
Let's zoom in a little bit.
That's what you see in the strongest primary uptrends, Rick. You know, if you go back and study every face-ripping rally ever, you're not going to see big corrections through price. You're going to see corrections through time. And that's exactly what's happening here. So, like, no doubt, you know, this one's very extended over the short term. Look at how it's gone vertical in 2026. But, you know, that doesn't mean it can't go to that 61.8 retracement level there. So, you know, if it's going there, it's going to resolve this little coil to the upside. And if
I like that.
It's going to fall back below this level, and it's going to need more time to consolidate.
Look at that gap too. I'm assuming that was their latest earnings report, right? Their latest earnings release, February 3rd. Nice little gap up, never got filled. That's very bullish, right? Especially when you saw the momentum, the follow through right after you got above those VWAPs right there. I really like this setup, Sam. This is a great pull from the mailbag.
Totally. Absolutely. Again, a huge shout out to James. That was great. Thank you for bringing that one along. All right, Rick, next up we have the Alibaba, ticker BABA from Chris. Says he's been holding it for a couple of years. With the recent drawdown, do I add more or has the uptrend come to an end? That's
for a couple of years, that is a phenomenal question. And for a couple of years implies that you're already profitable on that trade. And this has been an absolutely fantastic trade at many times for both longer time frame folks betting on the primary trend reversal, but also shorter term. These large cap Chinese stocks have very liquid options markets. BABA is probably the most liquid one out of all of them, and it's a favorite to express bullish China trades. in our team, right? And a bunch of other teams as well. I know that for a fact. And this has given us some of our biggest winners this cycle, just playing on the quick pops after consolidation phases. But right now, you are losing a little bit of that momentum. We've been probably in worse spots before, right? Probably April might have been a bad spot. And the entire tech complex, software primarily, software heavy, software adjacent. This is no different. It's been under fire. It's been underwater for quite some time, at least for the past 3 months, right? So I think that that's bleeding into Baba. This shows still a little sign of a bottom in the short to midterm, right? But I think that this VWAP coming in, this is the all-time high anchored VWAP. I think that could be a logical level to find some support. I don't know, like has this gentleman taken profits? Does he have can you remind me what he said?
Chris asked if he should add more on this pullback, or has the uptrend come to an end? And like for me, Rick, it just seems like this is going to continue climbing up the right-hand side of this massive base and eventually get back to that prior cycle peak that you have marked up there about 320, it looks like.
Yeah.
But like this is just how Alibaba consolidates. I mean, look, you have the annotations on the last 2 consolidations. I mean, it's just so
these are nasty,
fucking messy every single time. It's just such a headache. Like that's why I haven't had like big overweights in China. Like some of our colleagues here at All Star Charts been very, very bullish on China, but like it's just so messy in these consolidation phases. There are cleaner trends out there. Precious metals. I mean, look at how gold has corrected throughout this entire uptrend. I mean, it's so clean. It's like the trend follower's dream, but like this is like the trend follower's nightmare right there with Baba. It's just so messy.
Gold's clean. Gold has been clean. Look at the just textbook continuation pattern after continuation pattern. I mean, is this time any different?
Maybe.
Well, maybe. But going back to the Baba, yeah, it's messy, man. And I was long Baba a while ago, got stopped out, never got back in. You know what I did get back into? Actually, it's probably the premier area of strength in China. It is
Show them the ASHS FXI, Rick. Because I think that's what really tells the story is these large caps are sucking. Small caps don't care.
Yeah, this is the CSI 500 small caps, and it's one of the only ways Americans or the Western investor class can get clean access to the Chinese A-share market without too many hassles. This is the ASHS ETF. It's pretty thinly traded, but it tracks the CSI 500 very well. It's also hedged for the yuan. So it's just a very easy way. And right now, I mean, it's printing 14-year highs. What is it?
Yeah.
What was it last time I checked? It was
really sweet monthly candlestick there.
Yeah. Well, not 14-year highs. Like maybe I exaggerated a little bit. 11-year highs, 10-year highs. Still many, many, many years, right? And if we do the ASHS, ASHR, which is the CSI 300 ETF, which is the China large cap, that's the main market in China. Again, this is a primary trend reversal over the longest of time frames, and that line just
so this tells us we want to avoid stocks like Alibaba, right?
Exactly. I mean, again, like we were saying earlier, this is the whole tech and software adjacent trade getting killed. Let me see, ASHR, that's the CSI 300 over FXI. So we're looking at China large cap versus large cap tech, right? FXI is very tech heavy. We could even do an ASHR versus a CQQQ or a KWeb, whatever your, Jesus Christ, let me see, ASHR. There we go. So yeah, over the past year, technology stocks in China have been probably the worst spot to be in that particular market. And even the Hong Kong, Sam, I know you look at the Hong Kong every now and then. That's the EWH. That one's That one doesn't look anything like the FXI, right? It looks more like the ASHS.
Totally. It comes down to that tech composition. That's the story across the world right now, Rick, is like the United States is very much in a bull market. You're just not seeing it at an index level because of all that technology, things like the S&P 500 have inside of them.
Exactly. And I think, yeah, it's just a secular cross-border trend we're seeing. And until it wanes, until it stops, until it reverses, I think there's better spots.
Totally. I have no doubt that tech will be back one day, but just right now, technology across the globe is out of favor. So you need to respect that and lean into what is showing relative strength right here, right now in today's market. All right, Chris, thank you for bringing Alibaba to the show. We have a few requests here from David. So, Rick, I'm going to have you choose one. We have CNQ, the Canadian Natural Resources, and the VIST.
The Vista Energy. That's a Mexico-based Argentinian energy company, if I'm not mistaken.
Yes, sir. Looking at these, let's see. Targets from 4,825 lows. Sounds like David entered these at the April 2025 lows. So looking for some upside objectives here, I think is my understanding of the comment he left for it. And we also should take a look at how these look. So pick one of those, Rick. All right, here's what you're going to do. You're going to pick CNQ or VIST, give us an upside objective, and then look at it relative to the broader energy complex. Are these leaders? Look at it relative to things like XLE, RSPG.
Let's do the Vista, right? That's the one I have fibbed out already. So
fantastic.
Right now, 60.
Looks super actionable here too for all you gamers at home.
Yeah, listen, we're gonna do two fibs. We're gonna do one based on the wicks and the other one based on the closing prices, right? Just so we get nice little two different levels, make our job a little easier. Let's see. One is red. Red is based on close. Black is based on high and low. Make this full screen. So yeah, it's a little messy right now, but short term, got a little coil, little consolidation action right at the highs, which is, clean level to define risk. It seems like you are already long, probably using some sort of...
Been long since the April 2025 lows, so hell of an entry.
5 lows, yeah. I mean, if you've been long since the April lows, you held it through, 30, 40% drawdown.
Painful.
I mean, that's saying something, but if your risk was well defined and if you're still in the trade, kudos, right? So for new entries or to define risk at current levels, really looking at the 60 level as a clean breakout level, right? 60 is the breakout, call it 65, which is that fib, is confirmation. And I think the upside is near 100. And now I want to compare this both to Argentina and then to the XLE, because
and tell the audience why you want to compare it to Argentina.
Because this is an Argentinian company.
Is this the largest energy stock from Argentina?
It might be. Maybe YPF.
I'll check.
Yeah. So yeah, you can see the structure is extremely similar because.
And my machine is telling me it is from Mexico, Rick.
Yeah, it's a Mexico-based Argentina.
Oh, I see. All right.
Yeah. So
why would you headquarter, as our resident Mexican, why would you headquarter in Mexico? And then
again, I'm no expert in taxes or in Argentine or Mexican listing laws, but I would assume it's something to do with taxes. It's probably something to do with taxes.
Yeah.
I mean, it's
usually
listed in
America. It's a good guess.
It's listed in America, so it should make little difference when you own it. But the structure is very similar. The red line is the ARGT ETF. That is the, I think that's Global X Argentina, MSCI Argentina ETF. And the structure is very similar. And we saw a failed breakout in the ARGT recently, which Don't love to see it, right? This has
No.
been consolidating for what, like a year and change, right? Just kind of in this range, in this box, building out a base. Maybe you fail the breakout, head lower. There's a massive gap right here. This was the post-election. They had congressional elections. I'm sure that's what it was, congressional or something related to their legislature that really drove this higher. And it gave Milei control of the, or his party, control of whatever legislature they're running in Argentina.
Seems like
But anyway,
that's an important level to hold right there.
yeah, you don't want to see this gap. You don't want to see this gap get filled. It's just absolutely massive. And it's a similar setup to the original election of Milei back in 23, where you gapped up big time, consolidated, right? Gapped
That's
up,
interesting, Rick. It is really a eerily
Structure
similar
similar.
setup.
Right. Markets rarely rinse and repeat, that easy, but it's still something to watch. Again, you have a few key levels here around 87, 84, and that's important for the Vista, the VIST, right? But again, broader energy trade absolutely ripping higher, right?
And then look at
About
the
that.
VIST relative to energy.
Let's do that. Is
Is this a leader?
Over what time frame?
That is the question.
That
It's like
is the
short
question.
term, no, long term, yes.
Yeah, short term, definitely not. But long term, structurally, yes. And I think this is probably mainly due to the strength we saw in Argentina all cycle, right? Kind of culminated late 24, early 25 was when that strength started to wane. And for a while, it was like what, Argentina, China, and Israel that were really leading internationally. And then Argentina took a backseat, and other Latin American countries like Brazil, Mexico, which have slightly different stories there, started to take that leadership banner. But for now, I think this is probably not the best area to be in within energy. I mean, that's not just my opinion. That's price telling me this has gone nowhere versus the XLE since August. No, since May of 24. So coming in on
Facts
2
only
years.
here.
Yeah.
No opinions. All right, Rick. Thank you for breaking that one down. Let's move on to Hanson's pick. CDRE versus PL. Looking for the best long over the coming 3 months.
What is this?
And
CDRE.
then I have a feeling it's going to be hard to beat this chart. This is really nice.
Yeah, this is good. I mean, and
So
the fractal matrix.
CDRE, I'm not familiar with this one, so let's just make sure we know what we're looking at here. This is a nearly $2 billion aerospace and defense stock. Looks like it's really having a good day today here after this weekend's headlines.
Beautiful.
Looks like they make stuff for like military. They also do stuff for law enforcement and first responders. Interesting, Rick. Break down this chart for us. I think this is probably definitely better than the Planet Labs.
I mean, listen, price does not lie, right? You
Yeah.
have this massive base going back to 24, early 24. And then you have this smaller base, continuation base. You can even draw it as a coil, right? Right on top of that, right at the breakout level from the initial base breakout. And right now you're trending higher, I think 47, 50, 48, clean entry level. Right above that gets you 60 pretty easily. And there's not a lot of overhead supply there, right? You've never been there before. It'd be fresh price discovery. I love this chart. I absolutely love this chart. I'll add it to one of my watch lists. This is beautiful.
This is the front runner for chart of the day.
Yeah,
Here in Chart Request
really
Live.
is. Really is. And the Planet Labs has been one of those names that just is held up after, as it's held up during every single corrective wave we've seen. And I have my fib starting at the 10 level, which might seem random, but that's the SPAC level. It's important. I like to look at those. And you broke out of this massive SPAC base, and you've been trending up ever since. It's up. It was up 200%.
Huge winner. And this one goes up like 50% after every earnings report.
Yeah,
That
it's
has been the catalyst over the past year for every single rally. So I love that aspect of it as well. As
no, I
somebody
love
who
it.
watches earnings reactions very closely, I mean, few do it better than the Planet Labs.
Over the shorter time frames too, this looks very constructive. I mean, longer term, you can own it above 23, targeting 36, 37. What's after that? Probably 50, 58. There we go. 59. So this has just been a clean uptrend, as clean as they get in the speculative space, right? Clean
100%. Yeah.
consolidations.
Leader in what has been one of the hottest industry groups out there.
Exactly.
The
Exactly. And this chart reminds me a
rockets and
little bit
robots.
of the Ondis over the shorter time frames. This is what drones, the Ondis. So it's a similar trade,
Yeah.
right? Space and drones. And but yeah, PL has been, I mean, let's look at the PL SPY ratio. Right? It looks exactly like the PL. It's really dominated by the by that numerator. And it's breaking out of that massive SPAC base too. I really like the PL. I think it's a secular leader in the speculative space and the space theme as well. I think it's a fantastic stock. It's a great chart. But man, that what was it? CDRE?
That's right.
Looks
Yeah. I
interesting.
think that's the better chart though, as it's making new highs today.
Yeah.
And you have a much cleaner, kind of consolidation phase relative to what we were looking
This
at
one's
there.
earlier.
Planet
PL
Labs.
is later. Yeah, exactly. I like that.
Yeah, I prefer this one. Hanson, thank you very much for bringing those along. Great charts. Potentially chart of the day. So shout out to you,
Probably.
Hanson. You are doing something right. All right, next up, Rick. These ones come from Salem. Looking at double A. We have four tickers here. I want you to pick one. Double A is the first one. We have AMD up next.
Okay.
We have Melly after that.
Okay.
And we have Path as the final.
Okay. It's a tough
AMD
list.
kind of looked interesting there, right at the lower bound of a very well-defined range.
Yeah.
AA, I really like that theme a lot. Just materials in general, aluminum. Definitely
I
a great
think I'm
place to
going to
be
go
right
with
now.
you know what? I'm going to go with the AA because we already did Argentina, so that gets sort of melly. The path, I mean, I can just tell you that's at the lower end of a range. So you can play a bounce off of that level, right? 1050, 11.
Yeah.
But
that stock's a loser,
AA, it's a loser.
though.
That's a loser. I mean, you could get an aggressive bounce off of this level for sure.
Yeah,
but
no doubt about it.
it can look a lot like the PayPal.
Not a leader. We're looking for leadership here.
Let's do this, man. I love the AA. I actually own the AA. I've owned the AA for quite some time.
Okay.
Bought the initial.
So definitely not a biased opinion here at all, everyone.
Definitely not a biased opinion. Definitely not talking my book. Right? Definitely not going to tell you this is the cleanest way to play aluminum. Right? Definitely not one of the best ways to play the industrial metal cycle. Definitely not. Right? So ignore that. And right now, you just have this beautiful, beautiful coil, multi-week coil at this point, and it's just struggling to break higher, but it looks so much better than everything else short to midterm in the industrial metals complex, at least in my opinion. Just look at that coil. You could even draw it as a little consolidation base, right, Sam? Let me see.
Yep.
Let me draw that out.
It's more from a flag to more of a base.
Yes. Obviously, you want to see it get above. What's this close? 65, 60, call it 66. Really want to see it get above that. But the way these trend, you might just get one of these big candles gapping higher and it's up, like 5, 6, even 10% on a single day. But this is a clean base. All right, let's just zoom out a little bit and then we'll zoom out even more just because I love this chart so much. Probably talking too much about how much I love this chart. It's probably good for the trend.
Yeah.
But yeah, we have
no, you're spot on, Rick.
We have a key fib level coming in around 69, right? You got to break out above that. That's your confirmation from the coil breakout around 66. Primary trend reversal in action. Let's look at a monthly chart going way out. You can see the structure here is, let's delete this stuff, right? There we go. You can see the structure here is even crazier. You can fib out this massive massive move, right? Was it the pre-GFC highs in
Totally.
July?
And Rick, I think like it's also important context to like look at the broader metals and mining space too. I mean, like every single miner is reclaiming that great financial crisis. Sometimes it's the 2011 peak, but like for this one to not only to get back to that 2007 peak, but to exceed it would shock me. So I think just like structurally high level, I think that's where AA is heading, is new all-time highs, because look at every single other stock.
Yeah, no, that's a fantastic point. We do a lot of that. That's probably our bread and butter, is just intermarket analysis, betting on things look similar to each other, that act similar to each other, that should act similar to each other, trade similarly, just betting on one looking more like the other in the future. And that's really how the best trades are cooked up here at All Star Charts. Let me see. So yeah, you got that massive level confluence around 69. You get a clean breakout above that. Man, I think it's go time. If you're not in this trade already, I think that's go time. Shorter time frames, you can play this coil. It has a liquid options market too, which is not something that can be said about the rest of the aluminum complex. So that's something to keep in mind as well.
Totally, yeah. All right, Rick, thank you for breaking that one down for us, the AA. Then we have just a couple more requests here in the mailbag. One comes from Jonathan. What do you think of AXTI, very long-term, closing in on all-time highs from the year 2000? A lot of momentum in this stock. Jonathan wonders if he is too late.
Been wondering.
It looks like you are certainly not early to the trend. And what is this on your chart, Rick?
So this right here is an anchored VWAP with a little percent band. I just added 10%. Sometimes when I'm looking at longer term trends, especially things, companies that have been depressed from their former highs or IPO highs or whatever important level it might be, I add this and I kind of think about it as like an institutional line in the sand or a long-term trend following line in the sand. Just kind of gives you a wider band, right? This is giving 10% on each end of the anchored VWAP, but we can get rid of that, make it a little cleaner. Let's just get rid of this, right? And VWAP, make this. There we go. It's the same thing ultimately, but yeah, this broke out. I saw a lot of chatter around this name back in, I want to say September, October.
This is not one that I'm familiar with. It looks like it's a $2.5 billion semiconductor equipment and material stock.
I think it's tied to the whole, what is it, photonics? And again, forgive my ignorance in the...
we're not photonic experts around here. But exactly. Up another 20% today, Rick. So this thing is red hot.
Yeah, this has got to do with the whole photonics trade. And if you don't know what that is, join the line, pal. But it's been one of the hottest. It's been one of the hottest trends in this semiconductor, but broadly in the hardware space. There's a few Japanese names there as well. But the what is it? LUMN? No, it was the light, the Lamentum. Pretty sure this one's also in this theme. And I mean, you've seen these trends go just absolutely parabolic. And really, for technicians, there's not a lot of edge when a chart gets this extended, right? Maybe fading it in the short, like very short-term time frames. But I'm not one to fade strength, really. It's never really worked out for me too well. So I kind of avoid that. And I mean, again, you're running back to these, 2000 highs, like you said in the mailbag. Some consolidation.
Me personally, Rick, like with a chart like this, like it's really, really hard to get in here and define your risk. So I would wait for the price to exceed 50 and just wedge my stop really tight there at 50. Try to get stopped out 10 times. And then when this thing eventually goes, maybe it like 5X's again, that's kind of where my head is at with a chart like this.
Yeah. I mean, you have to be comfortable in a bull market buying something that's already doubled, tripled. right?
But it's also paramount that you manage your risk.
You have to manage risk. Right? Just can't be caught up in the hype, in the momentum, and become someone else's baggie, someone else's bag holder,
Yes.
or
We do
just
not want to be
become
bag holders here at
you
Stock.
don't want to be the latecomer that's being a party pooper, really. At the end of the day, I think you get some consolidation around this 45, what is it, like 50 to around, call it 30 level, which is a pretty wide range. But again, just look at the volatility of this product. Get a little consolidation here. I'd be very pleased, very happy to buy it. This is a monthly chart, so we can even look at it daily. And man, what a trend, man.
Totally. Yeah. Shout out to Jonathan. I see Jonathan's also in the YouTube chat. So pinging us in the mailbag and YouTube. You are the man, Jonathan. Shout out to you for being here.
Love it.
And all right, we have one more in the mailbag, and I think this is a good one, Rick. The Berkshire Hathaway, the Berk B shares. This has been a major dud for quite some time, ever since Warren Buffett announced his retirement. And holy cow, is this thing getting hit today? But man, if you look at like monthly candlesticks, I was just looking at the monthly chart of this, really constructive coil here. And you have a lot of insurance, so a lot of financial exposure here, and financials are the worst sector in the market right now. So that's certainly not a place you want to be. But you have to remember, Berkshire Hathaway also has that energy component. It also has railroads, and energy and railroads are two very, very hot themes in the market right now. So I think Berkshire's kind of an interesting situation. Plus, you've had how long since that Warren Buffett retirement announcement? I think that was early 25. Yeah, spring of 25. So it's pretty much been a year since then. So, like, how much more time do you need, Mr. Market, to take out that Buffett?
Maybe.
I don't know.
I mean, I think the Buffett premium's gone. Eventually, the market's going to realize, oh my God, it's a multi-billion-dollar company. It wasn't just Warren Buffett calling, every single shot, looking at 5-minute candles, buying AXTI, right? It's a big team, pretty well-owned company. I mean, it just hasn't done anything. This is Berkshire versus SPYs. I mean, it hasn't. This is Berkshire S&P.
Yeah, what a nasty failed breakout that was.
So
Holy cow.
So if you've been in Berkshire since, you haven't made any money versus the benchmark since 2008, which is pretty sad. Also, it's ironic how he loves getting his preferred stock and getting his divvies, but he doesn't pay out a divvy to his shareholders. I think that's pretty common, right? But yeah, I'm not a Berkshire Hathaway shareholder. Never have been. Just because it hasn't been a good stock to own anytime in my short career. So that's probably why I don't own it. But let's look at the Berkshire A versus Berkshire versus SPY ratio. And let's throw a little RSI on there just to show how momentum. God, I guess Trading View deleted my beautiful RSI.
Yeah, you have the default RSI here. So ugly, Trading View. You can do better than that. Why would I ever want to look at an RSI?
I know, that's disgusting.
Ugh.
But there we go. That's much better, right? I mean, again, this is a monthly chart. I mean, the momentum profile does not lie. It's been basically just kind of caught in the 50 range. It's been in the 50 range for decades at this point. You can just see how the slope of the trend has flattened out. So when you can't buy Coca-Cola at like 3 cents and get a 30% dividend, maybe it becomes harder to outperform the benchmark.
We have a great comment here from Coffee Doggy 99 says, I think I've made more in AXTI in 2 weeks than Warren Buffett did in 5 years.
Shout out to you.
Coffee Doggy, that is funny.
Love that,
well
brother.
done.
Love that for you. Love that. But yeah, that's it for Berkshire. Enough of that.
Yeah. Okay. All right. So that is all we have from the mailbag. That was a big mailbag today. Thank you, everybody, for hanging out in the YouTube chat while we go through that. I appreciate all of you. And Rick, I did not know this was a thing, but apparently we can get tipped on the YouTube chat, and the builder 1995 gave us 10 Canadian dollars, asking us to look at the TLT. So I feel like we'd be remiss to not look at the TLT, because we really appreciate your support, builder 1995. That is very kind of you.
1995, brother. Also Canadian dollars, steadily trending higher versus USD. So I appreciate that.
Yeah. So I think we'll hold on to the CAD, not quite convert it to dollars yet.
I'll ask Spencer so we can get that money. We can split it 50-50, Sam.
Yeah.
But let's look at the TLT. I know you had some thoughts on bonds, so walk us through.
Well, just looking at the daily chart, I mean, that's like a textbook abandoned baby after, a humongous move to close out the month of February. So not starting out March the way you ended February. It's just from a tape reading standpoint, that stood out to me. But, structurally, bonds, especially the long end of the curve, is just super duper range bound, not much to do. Like, if you want to get involved with bonds, I think going shorter duration makes a hell of a lot more sense.
The shies of the world, right?
100%. But again, you're seeing that nasty kickback today, abandoned babies all over the place.
Yeah.
I'm curious what HYG-IEI looks like today. I was reviewing my Blue Owl indicator over the weekend, which is the credit spreads overlaid with Blue Owl Capital. So wow, really impressive candlestick to start out the month of March there from credit spreads, digging in exactly where it needed to. Let's see if that can follow through.
Level. Yeah, no, that's what we want to see, right? Especially, again, if you own equities too, you just don't want to see this spread widen even further, just because of the broader risk implications. But going back to the TLT, this is just so tight on, almost every time frame, weekly, monthly. Let's throw a Straza indicator, a volatility squeeze, my custom script on there. Let's see. So on the weekly, it's tight. On the monthly, it's tight, right? We can even look at a quarterly. I know you like your quarterly charts. Paints a different picture, right? You're still digesting that massive decline, right? Massive bear market for bonds. But again, we're not trading quarters here, right? Quarterly candles, we're trading days, weeks. And I was looking at at all the futures opens yesterday, and probably the two I paid the most attention to were not energy, because anyone with a Twitter account could have told you that energy is going to open higher on Monday after what we saw, and that was certainly the case. But I was looking at bonds, and I was looking at the dollar. I saw the ZB, that's the Treasury, that's basically what TLT is, but in the futures market. I saw the open, Sam, yesterday. I was like, oh man,
this is gross, Rick. This is not a good look. This is not how you want to start a month.
But I know, and that's the thing. We saw every open get faded, right? Like equities opened lower, they started trending higher. Energy opened higher, started trending lower. Dollars opened flat, exploded higher. But bonds, man, they opened higher, and this has probably been one of the craziest, most aggressive, and 95 basis points might not seem like much, but just look at the size of the candle, and I could throw a percent ATR here, and it would prove that this is a pretty big move.
And again, this is the U.S. Treasury bond market we're talking about here. This is not Nvidia stock. Nvidia is worth $4 trillion. Sure, it kind of matters, but this is many trillions of dollars. This really matters. This has the ability to bully the equity markets.
Yeah, it does. It really does. It really does. And I think that fade in the because we're thinking midterm, long term, it's breaking out of this coil, right? So if that strong open with the gap up would have held, it probably wouldn't have boded too well for the energy trade, for the metals trade, right? But it hasn't. So I think you get a little failed breakdown here. A failed breakout in the bonds and the bond futures, which again should look exactly like the TLT. I think that bodes well mid to long term for energy, and I think you remain in the box. I think that the pain trade with bonds is patience. I wrote about that being the pain trade for dollars, right? Patience. It's so painful to just wait. But I think that's what you have to do.
It's important to remember that like markets have, essentially two stages. Either they're going up or down, or they're going sideways. Sideways is a trend, and that is the trend for bonds. It is sideways, and it has been for years until the market decisively tells us that's not the case anymore. I think it's irresponsible to think.
No, I agree. I agree
in a trending environment.
That's a great point. Yeah, just be patient with the bonds. Eventually, it'll give you a fantastic signal to either go long or go short, whatever that might be, whatever the narrative may be at the time. We're just looking at the compression over multiple time frames and just waiting for the signal. So I think that's the best thing you can do here is just wait.
Totally. So huge shout out to Builder 1995 for bringing that one along. And huge shout out to the whole chat. I mean, SM Traz, we've got Jay Hampton, our man Higgins, a humongous chat today. Looks like Builder 1995 won the super chatter of the day in the chat. And let's go back to review what I believe was the chart of the day. Do you remember that ticker? That was CDRE, it looks like. So let's just leave the audience with that one. Beautiful setup there. Looking to buy that one on strength above 47, targeting 60 in the CDRE. And it looks like SM Traz says, might need to tip or super chat Sam and Jason because my Gold Rush account is up 50% year to date. Hell yeah, SM Traz. That is what I'm talking about.
That.
Well done. And I actually need to jump off of Chart Request Live and go record the Gold Rush members video for the week. So everybody, thank you for being here. Ian Stewart, Jonathan, Jay, our man Higgins, all of you, thank you for being here and supporting us. Don't forget to give this video a like and subscribe to our channel so we can continue bringing you awesome content. And we will catch you.
Next time, we need more super chats.
More super chats, yes. Very much
currencies are accepted. All currencies are accepted.
100%. Yeah, we can get some like Turkish lira in the chat. That would be cool.
Whatever you want.
Everybody, thank you for being here. We'll catch you next week. Adios.
Pleasure, Sam.